Well, there was a big drum roll, and then there was mostly silence as the Federal Reserve released the minutes from the last FOMC gathering. And for me, well, the minutes continue to underscore the disconnect that the Fed has, where at least 3 members felt the need to hike rates, even as more and more signs are pointing to an economy that's slowing down rather than speeding up. Still, the minutes took some of the edge off that urgency factor, resulting in a consensus for a December rate hike slumping down to 65% from more than 70% when we came into the session. But it's the action in the bond market that suggests that maybe the Fed has lost control over rates. The 10-year bond yield broke through key technical resistance points over the last couple of days. Now, there's several factors to this when it comes to the bond market, including an avalanche of supply. And then there's the JOLTS report. That's that jobs report, which, well, it laid an egg. In fact, it adds credence to these subpar job reports that we've seen in the last couple of months. Job openings in August decreased month over month to 388,000. That's 7%. Workers are quitting, still about 3 million, but that's not the stuff of a hot jobs market. And you got to remember, this is said to be a very important report to Janet Yellen, and it bolsters her reluctance to take action. Something to consider. Now, I think there's been too much fretting over a 25 basis point rate hike when it's clear that the stock market rally is a sustained series of rate hikes is what they're really concerned about. And I can tell you right now, data does not support any such action. I do want to talk about American exceptionalism. We saw the seesaw session, and we saw where the markets more or less finished up. You know, Dow was up, S&P was up, NASDAQ was down slightly. But the market itself continues to follow Apple. Apple wasn't enough to offset the weakness in biotechnology, but everyone by this time knows that Samsung's smartphone drama has come to its final act, where the South Korean electronic giant had just simply thrown in the towel on that Note 7. In fact, things are so bad, customers may not be able to get their recalled phones back to the manufacturer. FedEx said they're not going to touch them. They won't ship them. But I tell you, this is not about that. This is a story about American exceptionalism, which we don't hear enough about anymore, and I think it's still a very real thing. You see, Apple sells a lot more phones outside of America than it does domestically. In fact, the fastest growing market is China, where there's so many cheap alternatives. And it's not just American smartphones. The world craves a lot of our stuff, and they pay a premium for it. Whirlpool, they sell their wares outside of this country. In fact, that number, by the way, is going to swell with Internet of Things. Caterpillar does a lot more business outside of the United States instead of inside the United States. But more than half their workforce is in this country. By the way, best performing stock in the Dow this year. Harley-Davidson sales are surging in places like China because people around the world see it as a proxy for American cool and American know-how. So the bottom line, American exceptionalism exists, and we must take advantage of it with smart trade deals and policies. Listen, it's not about exploding phones. It's about trailblazing phones, trailblazing washing machines, earth-moving equipment, software, and the list goes on and on. By the way, in the stock market after the close, big breaking news. John Stumpf, the much-maligned CEO and chairman of Wells Fargo, stepping down immediately from both positions. The news, of course, comes on the heels of the scandal that's impacted up to 2 million of their retail clients. The stock is up almost $1 in the aftermarket, trading, but I got to tell you something. I don't know that this resolves anything. In fact, we may see more things happen ahead. In the meantime, the board of directors has elected Tim Sloan. He's going to be the new CEO, and lead director Steven Sanger is going to be the new chairman.